Okay, so I've showed you how the price pressure bands work, and if you have any question or anything, just kind of, you know, make a note of those, and I'll get back with you on those shortly. I wanted to talk a little about the market today. I went over briefly when we opened about how, um, as far as I can see, I was the only one in the industry. I'm not. I mean, it sounds pretty extreme, but I'm looking around every day, combing so many financial news and other sites. I don't see anybody else that crystal clear came in and said, here's where you want to sell half your stocks, put on these hedges, and protect yourself because when it hits, it's going to be like a hurricane and you're not going to be able to do anything. You'll lose 10, 15% of your portfolio, especially these highfalutin, these stocks that have really ramped up in the high technology area. Be careful because they get, you don't know it. You're happy when they're all rolling up and everybody's yeehaw. The market just keeps getting goosed up by the Federal Reserve. But man, when they get hit like we just saw, it's a terrifying experience. I mean, to watch your portfolio go from $100,000 with gains and everything theoretically down to 80,000. That's a very unpleasant experience. So I was in there telling traders how to hedge it. That's all. And obviously, if you put on a hedge, then you're going to have to know when to look to buy back those shares. And I will attempt to give my best advice on that also. That's not a problem. But that's part of what we do in our Day Traders Action Live room. But I wanted to give you the price pressure bands to show you exactly how you can use those to improve your trading using Boomerang. Now, the market, people have been emailing me like crazy. What do you think? Where's it going? I saw that you called the top. I sold a few stocks. I get that a lot. I sold some of the stocks. I took that advice, but I didn't really fully hedge it and all that. And now I'm kind of beaten up from this move. But, I have confidence what everybody thinks when this happens. Well, they'll come back. Well, guess what? They won't. Now, I'm not saying the prices in the bull market can't continue in the market, but what we just went through for this last year, more than a year, is actually about 312 days without a 3% pullback. How stupid and ridiculous is that? That the Federal Reserve riggers would block even a 3% pullback for that long. It made no sense. But aside from that, um, you saw what they did when they pulled the plug. When they stopped propping, the market will stop dropping. It was a frightening. I kept telling everybody, this can only end badly. So my point, though, is the immediate emotion that comes to mind is, well, I didn't sell all my stocks, or I only sold a few, or half of the positions on a few, but they'll come back. Well, the truth is, someday the market, maybe in the next 6 months, will rally back where it was. But the point is, for right now, that's in the past. Where we were and where we are now, that's all in the past because we don't really know. Maybe they're going to go nuts and peel off 20% more. We just got hammered for 12%. I know because I ran those figures over with everybody in the room. We used 2865 on the ES as a measure, and I showed them where 1, 2, 3, 4, or 1, 2, 3, 5%, 8%, 10%, and 12% would be. And the S&P at 12% pullback from that key level was 2521. And let me just check real quick because we got a few minutes here. I'm going to go over and bring up a chart here so we can see exactly. I always like to, every time I say something, I like to back it up. It takes a little more work and effort, but I don't care because I want to back up what I'm saying here. Here's a daily chart thing here. And do you remember I said 2521 represented a 12% pullback? Okay, here's the low right here. Low. Let me make sure I got it right on there. 25.29. So when the market pulled back 143 points to a 5% pullback in the ES 27.22, I said if they crack that, look out below for 26.35. And I gave them the other figure. I said 10% is 25.78 and 12% is 25.21. And they came down here on the crunch down to 25.29. Now, keep in mind, I was talking about that way back when they're up 100 handles higher, and given traders the numbers, at least they could watch them. Now, I didn't forecast a 12% pullback. I was a little surprised myself, and there's all kinds of stuff on the financial news about what happened on this big crunch here, but that's not the point. The main point is that we, in our room at least, who took my advice on that, didn't get hurt. My portfolio is down about 1%. And that was, I wanted so bad to add hedges. I already had hedges on Thursday, and on Friday I wanted to add more, and it was all happening so quick. I just didn't get over and click the buttons because I was in my live room, and I said, get some more hedges on, and I didn't do it. I wish I had, but net, we were just down about 1%. So again, never bragging or anything. I'm just trying to tell you, I've been doing this a long time, and I'm just trying to give you advice that you're not going to get on CNBC and these other plays. They're not going to tell you, wow, the market looks pretty extended here, you should put on hedges. Nobody's going to do that. They'll just keep parading all these people on to tell you to stay bullish. And that's a big whatever. But here's the rebound today. 27.67. You with me? High 27.26. And the close, well, it was pretty hard. Right now they're trading 27.68 on Globex. So, a good 30, 40 point squash into the close, with the Dow closing down 19 points after being up approximately 300 something points, if I recall. Yow. So again, the downside's not quite over yet. Anyway, with that in mind, these are boomerang trading sessions, so I was just showing you here. Now, I'll keep that white one open. I'm just going to extend this boomerang chart, and real quickly let me bring up and show you the price pressure bands also being deployed on crude oil, which I use every day in our live room. Absolutely vital to the crude oil method and anything with boomerang, but with crude oil especially, I couldn't do it without them. The price pressure bands are absolutely stunning. We track trades from 545 going forward, so you can see here it was too late. But look at this one. Sell channel, that's first step, 5 steps, simple steps. You can do them real quick in your mind. Is there a buy or sell channel arrow? Yes. Number 2, have the price pressure bands open? Yes. Has the Cobra, this dotted line, cross the orange line? Yes. Okay, trade a pullback to the signal line and take 10 ticks. 8 to 10, I like to say. When you're in the heat of the action, you want to just scalp them out. It's like if you got an $80 bill in your pocket or a $100 bill, it's about the same, really. It feels about the same, right? So that's what I like to say with that. Okay, so up they go. That kind of whips on a little bit, but you have to cross under, so you're just tolerating what's normal. Market's kind of opening in the New York Stock Exchange around this time. But look at this. Sell channel, matching dynamic trend bands, classic stuff, price pressure bands. That's all I'm saying, is that that's your new confirmation. And of course we're using the new modification rule of the Cobra crossing under the dynamic trend band number 2. and indeed the orange line. But if you just didn't even have the orange in there, you can use DTB number 2. Price pressure bands open. That's a lot of pressure on that sell side, and down they come. You want to get that 10 ticks without having any problems, because trust me, they can whipsaw against you on the crude oil or any contract. So we're always warning traders, you want as much stuff stacked up with you as you can. So on this big spike up, it opened the price pressure bands. When those things open, usually you're going to get that 10 tick move on crude oil. Sometimes they go so fast you never get a pullback. Just like a lightning bolt. You don't even get a pullback. Choppy period, flat price pressure bands on crude oil. Here it is opening up again. Sell channel. Are the price pressure bands open? Yes. Are the dynamic trend bands matching already? Yes, they are. Take the first, pull back the signal line. 05 gets crunched down here. And they even open up a second level. Second level, classic boomerang on crude oil. Buy channel, which does not disrupt the dynamic trend band number 1 and 2. This didn't disrupt it at all, but you got to see a buy channel come in and close the candle. Sell channel, pull back signal line, 10 more ticks. So it's absolutely beautiful. This was a third level trade, which you don't take, but boy, look at that. It has pounded the crude oil hard. Crude oil can tend to really run more than other contracts. It's just really a very good contract for doing these trades on. Anyway, so with that in mind, I think you'll be very happy if you get the dynamic or the price pressure bands. It'll add to your arsenal of confirmation. And when we're trading, as I know I do it every day, you just want confirmation. And as you know, that's all you want. And I do want to say, be very careful. Give this market some time to kind of chill out a little. Watch the volume, because they are blasting this volume. If you see here, I'll show you right here on this volume meter on NASDAQ. And I actually should have heeded that warning a little more myself today. But yesterday was good. Day before was good. But we've had 5, 6 winning days. But today was kind of I was a little too aggressive. And I looked back and I said, here was the problem. Pay attention to the volume, because if that volume is just screaming through the roof, this was today's volume. It's not today's chart here, but today's volume. Normally, in a quote normal market, I'm just going right back to the close here. Let me scroll back a little faster. Just scrolling back to the opening. Normally, whatever the hell that is anymore, you'll get the mini NASDAQ will open around 1,1300 contracts, maybe pop 15, and then it kind of settles in. And that was with all this year of upside action and up, and pullbacks and up more and up more and up more again. Still, they would open up on the mini NASDAQ around 12 to 1,500 contracts, and they'd start backing off. And then ideally holding above this average period of 700 contracts or so, you're doing pretty good. But look at this volume. Look at all these 2,000 plus contracts trading. This is very hyper stuff here. A lot of people are coming in here and trading this action. So it's a little bit hyper. A little bit caution is warranted. And look at here, coming into the mid-session, 2,000 contracts going off. All I'm saying is we had a lot of elongated candles, and you got to understand the reality of the markets. There's nothing wrong with boomerang. It's just that if you got elongated candles and elongated ranges, that means you're going to have to elongate the stop, and that's going to cost you more money. You're going to have to be willing to tolerate that. I'm not recommending you do that. I'm recommending you wait. Just stand aside and wait. I learned that today. They were picking off 5-point stops just like it wasn't even there. Boom, boom, just because let me show you today's chart. So one thing to do, I'm just showing you, this is today's. Coming into the close here, just watch out for that expanded volume and realize and look at the candles. I'm now going to be really willing to just take time, let the thing settle, and focus more probably on exhaustion trades that have gotten really exhausted on one side. We had one today. I got 21 points off it, and it wasn't even, it was like nothing. 21 points just came in like that. But the rest where I was trying to make usual type of trades that I'm very successful at, we'll hit an exhaustion point. I'll short, for example, if they're moving up like in somewhere like, as an example, somewhere like in here, they'll move against me a little and then crunch, and I'll get them. I'll get my 4 points. But this thing today, I'm just trying to warn you to just watch for next couple days, maybe consider it. Look at this slaughter into the close here. And the illusion of the markets is, oh, well, you could have just gone short here and held it down there. Oh, yeah, right. That's the illusion of the markets. And the amateurs all say stuff like that because they don't know what real trading's like. But the point is boomerang's beautiful and it works, but the reality, look at these candles, even like this one here. 575, 1150, these 6-point type candles, very elongated, intense candles. Here's one here, 1850 low, 30 high. One candle. You see, if you don't see it, you got to notice this stuff. And again, I'm confessing I was a little guilty of that today. This thing, it looks like a normal chart like we always look at, right? But look at this. 18 quarter low, 29 quarter high. That's 11 points in this one candle. That's not normal, but the chart looks the same. Let's see what this one says. 6,600 high, 8850 low, 12-point candle. I'll try to show you what I'm talking about. I'm just waking up to this myself. This market is extraordinary. Okay, see this? That looks like, oh, that was a market that really sold off, right? Well, I'm going to real quick scroll back and find another one that did something similar. Let's find kind of during a normal period. Okay. Here's a sell-off here, right? Well, here's a candle here. 62.50. 50, you see this? A classic example. See this? It looks like, oh, well, it just looks like the chart we just looked at for today. But look at here. Here's the top of this candle, 57.75, right? Here's the bottom, 52.75. 5 points. And it was a big candle. Let's look at this one. 55.50. 50.50. So this is a elongated candle, but it's only 5 points. But the chart looks like, oh, what's the big deal? This is what I'm confessing, I missed this today. We did great, but I noticed that the volume was really high, and this thing just wouldn't respond. So that looks like a normal sell-off. But look at these candles. Here's the longest one in here. 36.50, 43.50, 7 points. Instead of 5, it was 5 to 7, right? Okay, here's a super elongated candle. 51.42 low. 7, you see that? That's like, wow, that's a big elongated candle. 7 points. You with me? Now, let's quickly flip over to what I was just talking about. It's an illusion. Now look at, doesn't, see? Well, that just looks like the chart we just looked at, right? Especially if it's, I usually don't have it open, maybe this much. But look at that. But look at this candle here. The high 26.75, the low 17.75. That's 10-point candle. Look at this one. 20.75, 10. These are like double the size of the biggest candles we're seeing. Look at this one. 6,600, I think we just looked at this one, and 88.75, almost 11-point candles. So, and here's a reflex one here. 82 quarter, 96. Look at that. 82 on the low, 96, 14 points. So what is the point? The point is the candles, the chart looks the same, but the candles are double the size. If you're using a 5-point stop and the average candle is 3 to 7 points, and now they're 7 to 15 points, guess what's going to happen to your 5-point stop when you're reading Boomerang and or your charts or however you're trading? It's going to be a little bit trickier because, say for example, you said, oh well, this is a first level, here's a second level trade here at 40 half, so I'm going to get long according to the rules, dynamic trend band matching. It's a second level trade at 40 half, or 40 half, let's say 40 for example. But look at on this low here, 29, 40, which might have and probably would have, from my experience, would have survived a pullback here to ramp up. Look at 40, even on this second candle, which wasn't as extreme. 40 came down to 33. You're stopped out for 5 points. What does Spica coming down here to 29.50? But then it ends up going your way. In other words, the Boomerang method is working, but because of the volume, this is the most important thing I'm trying to make today, because of the volume, the elongation of the candles from the volume, the drama of all the traders thinking they got to jump into these markets for unknown, ungodly reasons when they should be standing aside more likely. Do you see where I'm going with this? Now, on the reverse side, you get in a candle like this, 25.50 entry, the first candle lower is 16. You with me? 9 points in one drop. Very often we'll see this similar looking chart, and you'll need 1 or 2 candles to get your 3 points. But this one dropped 9 points from the entry, just like that. So it works in both sides, where, in other words, the 3-point gain and the 5-point stop are based on a different average candle length. And that's all I'm saying is be careful. What do? I don't have an answer necessarily for that other than be careful, stand aside. If you want to move your stop to 12 points and try to work a larger gain, that's up to you. If you figure a 5-point stop and 3-point gain, that's approximately what, 70% stop versus gain. So if you're using a 12-point stop, I'm just doing this off the top of my head, a 12-point stop times 70%, you'd be wanting to search for an 8.5-point gain on these trades. And you can see how if you put this on here and you had a 12-point stop, that would be 37, right up about here, which would look normal on a Boomerang chart. But you wouldn't want 3 points, you'd want to take 8.5. So there's 25, there's your 8.5 points right there. You see that? So I'm kind of right in front of you writing a potential method, but even still, on a second level trade like this, let's see, 40, 12 points would be 38. I mean, 40 would be 40 points minus 12 would be 28. See that? So in terms of the expanded size, getting long at 39.75.40, it held a 12-point stop down here at 28, and you would be looking for what? An 8.5-point gain. So 40 ramped up to 56, so you easily got 8.5 points. You see what I mean? 12-point stop, 8.5 gain, based on the already existing Boomerang percentage-wise readings that we're using to get this thing done. Let's, for fun, just measure this one. Okay, pullback signal line, 25. 25 came down to 1550. You let it wiggle around a little, and then 25 comes down. There's your 8 points. Or it actually happened at the bottom of this candle here. So it's literally like the same boomerang method, but with expanded volume and the candles. And you say, well, how do I measure the average size of the candle? You just got to go in and measure a few and observe and see where they're flying, how they're going. Let's try a little trickier type trade. Let's find one that's a little more challenging here. Okay, like here, 6703 looks like it's going to get whipsawed for 12 points. 03, so 15 would be a stop. Okay, see what I mean? 5 points will usually, if everything's lined up right with the DTBs and everything, price pressure bands, Cobra crossing there, you're usually going to get 3 points and it'll hold a 5-point stop. So if we change that to 12-point stop and an 8-point gain, here's 03 plus 12 would be, your stop would be 67.15. There's 67.10.75. They flap around, and then you're going to be looking for what? An 8-point gain. 03 would be 66.95, right in this area here. See that? I mean, that's basically the formula. If you want to trade boomerang, use a 12-point stop, an 8.5-point gain, follow the exact same rules, and I kind of just figured that out right here while we're talking. Let's test a couple of these here. 65 half minus 12 is around 53. Here's 57. So you're actually tolerating all this with 12-point stop. I'll use round numbers. 56 minus 12 is 46, minus 2 is 44. Held it, easy, up it goes for 8 points. Price pressure bands open. Well, this one's not a problem because they hit the pullback to the signal line with everything matching right there, so you had no pressure on the stop. Same with this entry. Trying to find one that has a little pressure on the entry. Okay, here's another one. Say you took this one, even though it was a little bit of a fat channel, but you just perceived that you should go long there. 50 minus 12 is 38. 42 held. 38 held. It's 42 low. 8.5 points up. And all I did was because I was watching today how a 12-point stop would have held the noise, and then 70% of that's 8.5 points. That'd be the equivalent of what we're doing with boomerang. Let's try this one here. Short at 48.75. Let's say 49 for ease of the brain. 49 plus 12 is 49, 59, 51, 62. 53, no problem. There's 8.5 points. So if you want to trade, that's actually what I'm suggesting. And I am recording this, by the way, and I'll push it out there later tonight or tomorrow. I'll try my best to get out. I've got a guest visiting from Croatia. Longtime friend of mine's coming in from Croatia, so I'll get this out, but I'm just saying I got to tend to a few things around the pad here. We'll get them out. I usually get them out same night or later in the evening. But anyway, I think that's a good thing. I think I like where we ended up arriving at the idea of this 12-point stops, 8.5-point gain. Now, so tomorrow, if you decide you want to do that, otherwise just stand aside. You don't have to try to go in with the 5 and 3 formula. Just stand aside, but if you're willing to take that guess, or that risk, I should say, and you get in the market and you feel it's a rock solid boomerang trade and you want to see These dots, the best trades are when the dots are as close as possible to the seller buy channel arrow. Those are the ones that tend to have the easiest dot. Doesn't eliminate a trade like this or one like this, but I'm just saying keep that in mind. But so I'll get this pushed out there. I hope you took notes on that. Or stand aside, or just, yeah, stand aside and wait. In a few days, things will calm down. How to measure the candles? It's taking your cursor and just pure math. 75, 83. It's 8 points. And then you're going to have the little ones here, 79, or let's say 80 to 85. But that's an elongated candle in our regular boomerang chart. So it strikes me that average elongated candle on regular market, in quotes, regular, is 5 to 7 points elongated, and average, and I'm going to have to test this out a little more tonight, is about 3 to 5. So right now, in this current market, at least today and yesterday and the day before, is off the rails on Friday. It's just like a hurricane. Um, the elongated candles are running, what did we show earlier? They're running like 8 to 12, and the average candle is running 6 to like 10. So it's like everything's like double basically. Like 8 to 14, 6 to 10, or 6 to 8. 6 to 10 is good. The idea is you can easily measure a bunch of candles by just glancing at them. But again, in closing, I want to show you. Take a look at this chart making a run up in mini NAS. And here's the same chart. Look at that. Going way back. Look, it's almost the same, right? Low 22, high 25. That's a 3-point candle. Here's a real elongated candle. Low 23, high 30. 8 points. And that's a super duper elongated candle there. You with me on that? Let's go to today. I'm going to just do this again. Here's a big elongated candle. Looks the same as the one we just looked at, right over on the sell side. 74 high, 55 low, 20 points almost. Dear God. You know what I mean? So let's take an average one here. Low 99, high 1075, 1175, and it just looks like that other chart. You can test a bunch of them. Low 15, high 26, 11 points. So that's what I'm saying. And now I'm realizing too, I wish I would have had this more in my head today, because these 5-point stops, they're not going to hold in an elongated candle like that. You may follow the right method and everything, but it's a different world right now we're in. So consider that for boomerang, and watch when it goes back to quote normal for that volume to drop down and average on a busy day around that green 700 level line, and then dipping down between the two and the magenta line 300 average. And watch out if they're holding steady above the 700 level and blasting into the 1200s continuously. You got a market where you got a lot more people in there, and that's going to expand those candles. So thank you for joining today. I really appreciate it.